I was here 12 months ago, had a yarn to everyone about our strategy, which is to monetize our gas reserves by going from gas to power. Safe to say what a difference 12 months makes. You know, the whole gas to power strategy is something that's somewhat in vogue. Governments around the world, including our federal government in Australia, are now recognising the importance of gas to support the energy transition. And, you know, having been involved in gas to power, both with our existing power stations and our next one that we're looking at building, it's just not that straightforward. You know, there's economics that are challenging and whatnot, but there is a real opportunity there to capitalise. And I'm here to tell you why we're in the ideal position to capitalise on that. So thanks for your time. So who are we? QPM Energy. We're an emerging utility company, and it's quite interesting. Like, we need all this gas-fired generation, and all our traditional utilities have moved away from owning gas assets. Problem is, when you go buy gas for $12, you go pay APA, some pipeline and some storage costs, your gas might end up costing you $15 or $16. You don't make much money generating electricity. So, you know, is it now up to gas companies like ourselves in the upstream to actually undertake this strategy that, you know, governments are calling for and establishing gas-fired power generation? We've got 435 2P reserves, so a big reserve base to monetise. We're a mature producing field, about 125 to 130 wells in the field, and we're going about 27 to 30 TJs per day. Extensive gas gathering infrastructure, transport and storage, and we own the only compression facility connected to the North Queensland gas pipeline, which transports gas to Townsville Power Station, which we control the dispatch rights for. We also have the dispatch rights for the Little Moorumba Power Station. We've owned this asset for 2 years. FY24, we generated $75 million in gas and electricity sales, and FY25, we did $88 million, and that's with Townsville Power Station being offline for 3 months, undergoing an overhaul. So, you know, we're pretty confident of improved numbers this year. But probably, you know, the most exciting part of our business and what I really want to talk to you about is the launch of our Isaac Energy Hub. Stage 1 will be the 112 megawatt Isaac Power Station. Just corporately, where we sit, about 100 mil market cap, 20 mil cash in the bank, and our directors are an attractive group of people. So we are a growing utility company, currently about 173 megawatts under management for dispatch, and we're looking to grow that. So with the IPS, that will take us to just shy of 300. And beyond that, we see further growth from our gas reserves, increased generation, whether it be through increased gas fire or a BESS to complement our low-cost gas-fired power station. What that should do for the company is deliver strong revenue growth. And really our strategy is to increase the proportion of revenue that we generate from electricity, because you don't need much gas to produce electricity, but you can make a lot more revenue from it than you do selling gas traditionally. So at the moment, we sit around 62% of our revenue being from electricity, but only about 30% of our gas production goes into actually generating electricity. So we're looking to increase the amount of the amount of gas that we send to generate electricity, and obviously looking to grow our revenue moving forward. So, you know, in FY28 and beyond, when the IPS is up and running, we look to see a material increase in our revenue position. And look, this is just our reserves. We've had this asset for 2 years and undergoing a lot of technical work and whatnot. We've managed to increase our 2P reserves. So we now have 435 2P, of which 300 roughly is uncontracted. And it's really there for us to execute on this gas to power strategy. And just from a valuation perspective, you know, we do have one of the largest independent 2P reserve positions on the ASX, but we have a market cap that is somewhat dwarfed by some of our peers. So, yeah, make of that what you may. So I've kind of raced through those first 5 slides because I saw what happened on the previous one, so I just wanted to leave myself enough time to go through what is the really important part of my presentation today. So we recently completed a feasibility study into the Isaac Power Station. It's two 56 megawatt GE Vernova gas turbines. These will consume about 1 to 1.1 TJs per hour, generating 112 megawatts. We'll probably send about 4 PJs of gas a year, running the power plant at about 10 hours a day. We'll generate 384,000 megawatt hours per annum into the grid. That's a layout of the site. This plant will be ideally located next to our existing infrastructure. So down in the middle there, you can see our existing compression facilities. And just to the north of that, that's where we're going to locate the first 2 of these gas turbines. And there's enough space for 6 turbines there. There's a grid connection out to the east, about 2 kilometres away. That's the local PowerLink Moorumba substation. And that's got sufficient capacity for, we think, around 300 to 400 megawatts. So it really is an ideal location, to have this power station co-located next to our assets. PowerLink have been fantastic in dealing with us, and we're racing through our grid connection at the moment. PowerLink recognises the need for gas firming in Queensland, particularly in Moorumba, where you've got a lot of volatility in the loads from all the coal mining operations up there. So, we should have our grid connection and our offer to connect in the not too distant future. From a capital cost perspective, it's about $200 million and some spare change to build this power station. Of that, about 50 to 60% of the capital costs actually relates to the turbines. And we've been quite fortunate because we were able to secure these turbines under historical prices. What's happened in really the last 12 months and really on the back of AI is that big tech out of the US has come in and they've just seen the need for power generation with respect to data centres. If you call up GE or Siemens today and ask for a turbine, you get in the queue and it'll be delivered 4 to 5 years later, if you're lucky. And notwithstanding that, you've got to pay a reservation deed, somewhere between 20 to 25% just to book your spot in the queue. And can you imagine putting that much capital down 4 or 5 years out when you're unlikely to have approvals or anything of that bear? So that's one of the big challenges that everyone faces at the moment in terms of getting gas-fired generation off the ground. Economics of the project, this will be one of the lowest operating cost gas-fired power station in Queensland, with a short-run marginal cost of around $60 a megawatt hour. Those costs primarily relate to our cost of gas supply, which we'll be supplying straight from our field. Based on relatively conservative pricing assumptions that we've obtained from an independent technical expert, we estimate about $50 million a year in EBITDA for this project, which based on that capex, call it about a 4-year payback period on the capital costs. These are the units that we're buying. They're basically jet engines, as if they're on a ground, as opposed to being in a plane. And as I said, you can't get these units. They've gone significantly up in cost. So if we were to redo this feasibility study today with newly priced units, we'd probably see a 10 to 20% increase in our overall capital costs. So, combination of high capex and long lead times, it does make it difficult to get new gas-fired generation off the ground. Fortunately for us, we've secured our 2 units. We raised some capital in the middle of the year from our supportive shareholders, and we've put down a down payment of on these units, so they're secured, and hopefully they'll be on a ship just before Christmas and landing in Queensland, probably about first quarter next year. Just to kind of elaborate on what Martin said earlier today, and why do we need gas firming? This chart is kind of a 24-hour fuel mix consumption within Queensland, and that big area of bright yellow is the contribution of solar. So Queensland has the highest rooftop solar penetration in Australia. We've got about 6 or 7 gigs sitting on the rooftop, and there's no curtailment in Queensland. So what that means is that, you know, the kind of coal fleet that we have and everything wasn't designed to be turned down to this order of magnitude. And then when the sun goes down at 5 o'clock and we all get home from work and we start cooking and we turn on our air conditioners, demand spikes, and the coal-fired power stations weren't made to ramp up that quickly. So you create this real volatility in energy demand, and that then creates volatility in energy pricing. And the effect of this, and look, I'll just highlight, that black area on the curve is how much coal still contributes every day. And if we want to, you know, remove those coal-fired power stations in the 2030s and 2035s, it's a lot of wind, batteries, gas, and everything else that needs to get up and running, particularly in a country that's not adopting nuclear. So this is the kind of 24-hour typical daily price of what you see with Queensland electricity. It is the most volatile market in the world. That blue line horizontally is our short-run marginal costs of $60. And for us, we can actually run this power station for 16 hours a day and make money. But for anyone else who just wants to build a gas-fired power station, doesn't have their own gas field, maybe can get some gas and convince someone to sell it to them for $12 and then pay some pipeline and storage costs, you'll see that blue line shift upwards towards about $170 to $180 a megawatt hour. And that then narrows the window down at which they can actually make money. You know, they can only make money for about 2 or 3 hours a day. And I'll tell you what, that doesn't pay back capital costs. So this is the challenge that countries all around the world face. It was a challenge before the cost of turbines went up, and it's an even bigger challenge now with the lead times. We're in the ideal position. We're vertically integrated. We've got a low-cost gas supply, and therefore we can operate this power station on a very low basis and make very, very strong returns. But, you know, it's tough to see how we can get 3, 4, 5 gigs of gas-fired generation up and running just based on typical economics. Really, you know, if this is to happen, there needs to be some government intervention, capacity payments like there is in Western Australia, etc. Just different things, because just on the market dynamics, unless you have your own gas field that's kind of co-located with your power station, doesn't make great money. So for us, we feel that puts us in an even stronger position. You know, we're already doing this at 2 power stations. We've got our third one up and coming. A lot of people are talking about it, but we actually understand the economics and what it takes to get it off the ground. And interestingly, here's the cost curve of the gas-fired power stations in Queensland. We will be the lowest cost power station, and that's us in the orange bar. And this data has been supplied off actual AMO data from 2024. Interestingly enough, the second power station we operate, the Townsville Power Station, is the second cheapest in Queensland. So it all comes down to your cost of gas supply. But as I said, you know, it starts to go up very, very quickly from there. We've talked about the government and their support and their recognition. There's been a lot of words so far, which is great. But as I said, you know, if we're going to get this much gas-fired generation up and running, there probably needs to be some economic benefit as well. Not that we QPM need it, but for the rest of the country. And look, I'll just leave you all with, you know, this is our track record over the last 2 years since acquiring the MGP. You know, we've turned the field around. We're about to embark on a new era. We've got new commercial contracts in place that should see the company profitable from this financial year onwards. We've delivered a couple of reserve upgrades. We've acquired the Moomba Power Station, and we're well on the train and the path to building our third gas-fired power station, the Isaac Power Station, hopefully taking FID towards the end of this year. And this will be up and running mid-2027. I'll be outside, so if anyone wants to come say good day, have a chat, ask any more questions, come see me. Cheers, thank you.